Hello and welcome. You are watching Business Plus here on News 9 Live. This is Krishna Kumar, and joining me in the studios is my colleague and friend Suyash Maheshwari. And as always, we begin the afternoon edition of Business Plus with a check of how the Indian stock markets wrapped up today's trading session. Sensex Nifty opening in the red this morning, but have had a very good session of trade ending in the green with Sensex up over 200 points, Suyash, isn't it?
Yes, so it was a green day for the markets, Krishna.
Just like us.
So, as you mentioned, Indian markets had a muted opening. Nifty slipped below the 19,600 levels, and in the last 2 or 3 days we have seen that the markets has been have remained largely directionless.
Right.
Finally we saw some momentum in the markets, and that too on the bullish side. Now Nifty at close was up about 50 points, up about 0.26%, and it managed to close above the 19,700 mark, which according to a lot of analysts, Krishna, was the near term resistance, and perhaps from here on we can see a bit of a pullback rally, if not a continued bull run. Now Sensex also gained about 170 points. The index also managed to close above the 66,000 mark. It ended at 66,118 levels. Now the bullish momentum was also seen in the broader markets. The broader markets, which were also trading in the green in the morning, continued to build on those gains, and the Nifty small cap index was up about 1% at close, whereas a mid-cap index gained about 0.75% in today's trade. Now, talking about sectors, Krishna, a lot of sectors, most of the sectors in fact on the NSE participated in today's rally, and Nifty Pharma, which was up about 1.2% in the morning trade, also ended about 1% higher at close. Another sector which saw a lot of buying interest was the FMCG sector. It ended about 0.8% higher. Other sectors which were also under pressure in the morning, like Nifty IT, also gained momentum after Morgan Stanley raised target price on several blue chip IT stocks, and as a result the index was able to manage ended higher, about 0.4% higher in today's trade. Now the banking pack, Krishna, was under pressure. It has been one of the underperformers in the last few weeks. We saw a correction of about 3.5% in the banking index. Even today the banking index was subdued. It ended about 0.08% lower. Now among the stocks that were in action today, let's talk about the gainers and the losers quickly. Among the gainers today, Krishna, was L&T. Now L&T, which has been on a bit of a bull run in this financial year, has rallied about 20-25% since the start of the financial year 2024. Took some bit of a breather earlier in the month. It has once again started on its bullish trend, and the stock was up about 2% in today's trade. Coal India, which is also on a fairy tale run, was in the news today, and it was up about the stock was up about 1.8% in today's trade. ITC, Cipla, LTI, Mindtree were also some of the gainers among the blue chip stocks. All three stocks rallied from 1.3% to 1.5% in today's trade. Now among losers, Krishna, was Titan. Titan dropped about 1.4% in today's trade. Now a lot of brokerages have shared a bearish call on the stock after the recent run up. According to them, the valuations, at least as of now, seems a little bit stretched, so perhaps the counter is witnessing some sort of a profit booking. It was down about 1.4%. Other stocks that were down today was Grasim, Hero MotoCorp. Hero MotoCorp was one of the top gainers yesterday,
along with the two-wheeler story in trade yesterday
in two-wheeler stocks. Now that saw some profit booking. It corrected and fell about 0.9% in today's trade. SBI was the sole counter among banking stocks that was under pressure today. In fact, ICICI Bank also witnessed some selling and ended among the top losers in today's trade, down by 0.7%.
Right, that's a quick wrap-up of the day's trading session from Suyash. And Suyash, we're only happy to wrap things up that early because we have a very, very special market expert joining us live on the broadcast on this edition of Business Plus, which is none other than Mr. Ambareesh Baliga, independent market expert, who joins us live again. Thank you so much, as always, for taking time out to be with us. Directionless markets is what it's been, Mr. Baliga, off late, but good end to today's trading session for sure, after opening in the red, closing up over 200 points on the Sensex.
Absolutely, because even earlier I had mentioned that 19,500, 19,600, this band is a very good support level for the markets. And in case we break this, we could see a very steep fall. So fortunately, I mean, for today, we have actually taken a very good support at these levels. And from there, we saw a decent bounce back. Now, I mean, I've been looking for reasons for this bounce back. I'm not finding too many reasons as such, except for the fact that I mean, there's a decent amount of I mean, one can talk of value buying or speculative buying at those levels because we have seen a decent correction in the last few days. So I think that could be the only reason because if you look at the data, the red flags are still there. I mean, you still have the oil prices going up. I mean, we're quite sure that Fed would increase the rates before the year end, which is again negative for the Indian markets. And at the same time, you will also have the earnings for Q2 starting in the next 2 weeks. And the expectations are decently high this time. So disappointments could be there, very much possible. So looking at all this, I don't know as to how much the markets will bounce back. But yes, I think for the time being, we are in that bounce back zone. And we could see the markets moving up for a day or two more.
Right. One other thing that I've noticed, at least for this morning's trading session and the close, is that when Sensex Nifty was down in the red about 0.5% in the morning, you had mid caps and small cap indices up 0.5%, and they've again gained another 0.5 more percent during the day's trading session, with Nifty and Sensex are up about 0.3, 0.4% for the day. You have the mid caps and the small cap indices up nearly 1% for the day. Are we clearly seeing a trend here where in a directionless market, value buying that's taking place in the mid caps and the small cap stocks?
No, I don't know how much of value buying can actually happen in the mid cap and the small caps because most of them have already run up quite a lot. And whenever you have such a large move in mid cap and small caps and the amount of interest which we see, it is very clear that it's the retail and the HNI crowd which is there more than the I mean larger funds or institutions because they normally don't look at small caps. So I mean since I mean this part of the investors which are talking of retail and HNI. I mean, they have made decent amount of money from the small cap and the mid caps in the last couple of months. So it's quite natural that they will keep putting money in. I mean, whenever they see a correction, unless of course, I mean, the correction is huge and which can actually start a panic. But till then, you'll have these people coming back and investing. I mean, fresh funds because every time they have invested, they have made money. And I mean, we should always remember that here the memory is quite short. So what they have seen in the last 4 or 5 months, that is what they follow.
Now, Mr. Baliga, as you said that Indian markets, on the back of today's run could perhaps continue the rally for the next couple of days. Now, what will be the near-term resistance levels according to you?
I think the resistance clearly is at closer to about that 20,000 levels. I mean, where we had crossed last time, and then we saw I mean the correction from there. I mean, when the people started talking of about 20,500, 21,000 levels, that's when the correction really happened. So right now, I mean, broadly, you can say that the markets would be in this range of 19,500 on the lower side to about 20,000 on the higher side. But like I said, I mean, if we break this 19,500 levels, we could actually see a 750 to 1,000 points sort of a correction from there.
Mr. Baliga, Indian markets are definitely looking up and up, even the commentary coming from a lot of brokerages. In fact, a lot of global brokerages has been positive. Now, JP Morgan said that, valuations, even though our stretch seems justified at this point in time, even Nomura, the Japanese brokerage, upgraded India from, to overweight and has given buy calls on several stocks. But the market, the global equity market continues to reel under the pressure. Now,
Right.
I was reading. Sorry, sir.
Yeah, continue.
Yeah, so Indian markets has been an outlier. Now, one of the news that I was reading yesterday was there is expectation that US economy could face some sort of a situation of stagflation, where we have seen growth moderating probably over the next couple of quarters and inflation and the prices remaining elevated. So, in your opinion, are we staring, at least in terms of global markets, at a stagflation sort of a scenario?
Very much possible, and especially when that happens, I mean, you will have the global markets correcting, and against that, you cannot have the Indian markets moving in the opposite direction. I mean, being a bright spot as far as the global economy is concerned, we could outperform. But outperformance does not mean that we will move in the opposite direction. You will have the global markets coming down and the Indian markets going up. I think that's not possible. I mean, it's possible in the short term, but slightly if you're talking about medium term, that's not very much possible. So, I mean, that's another reason again why our markets should see a correction. And when we are talking of valuation, if you're talking of the large cap and the blue chip, I mean, I won't say it's too stretched. I mean, although the valuations are decently high, but it's not very stretched. But when you look at the valuations of the mid cap and the small caps, I think they are quite stretched. And I mean, if you just look at the SME index, I mean, that has moved up from where? About closer to about 100, 200 to about 1900 levels. So, I mean, there again, quite a few of them have become multi-baggers for not much of a reason. And recently, even the regulator has, come down quite harshly on that. And in fact, they're looking into as to why, I mean, these stocks have moved up so much. So I think clearly there are, I mean, a lot of red flags around.
Right, talking about red flags, crude oil certainly a red flag, Mr. Baliga. You're set to have where Russia and OPEC together massively cutting down on over 4 billion barrels of oil per day of production. This is the biggest cut in oil production in the last 2 decades, barring recessions. So that is a red flag that both Indian and global markets will be, quite worried about.
So just to jump in here, the 4 million cut has not been announced yet. There are certainly reports,
right,
but currently the 1.3 billion cut is still active.
Fair enough. But the point is that we are looking at a situation where there are possibilities of a 4 billion barrel per day oil production cut, which which would be then the biggest in 2 decades.
Absolutely. I mean, at the same time, we should remember that the whole of last year, last 12 months, I mean, we had the benefit of a cheaper Russian crude as compared to the, normal your Middle East crude, which is to buy. And Russian crude had become, I think, closer to about 40% or 45% of our basket. And because of which, our combined price was lower than expected. But now with the Russian crude also moving up decently well, and that discount not really being available for us, clearly the combined price, I think, will surely be much higher. And I think that's what is going to hurt us much more than anything else.
Now, Mr. Baliga, as you said, India continues to be in a bright spot in the longer term, but you expect some sort of a correction in the medium term. Now, as Krishna rightly mentioned, crude is a pain point. What are some of the other factors, in your opinion, that could, perhaps pull the Indian markets downwards and could be an overhang in the medium to, near to medium term?
Like I just mentioned, possibly the earnings, when we talk of earnings, it's always expectations versus what is delivered by the companies. And now between the last time the earnings came out and now, the markets are at a much higher level, which clearly means that the expectations from the earnings also would be high. So when the expectations are high, the disappointment, chances of disappointment, also is much higher. So, in case we see any disappointments, that could be one of the reasons. The other one would be as we, get closer to the next Fed hike, that will also possibly have a decent amount of pressure on the Indian markets. And last but not the least would be monsoons. Which are more or less getting over now. Although we may have the total rainfall more or less slightly below normal, but then the issue is not in the quantum of rainfall. The issue is clearly on the distribution. And we'll have to see as to what sort of an effect it has on the rural economy overall, and at the same time on the food inflation going ahead.
As you also mentioned, earnings season could perhaps dictate the near-term momentum in the markets. Now, as you also said, that earnings season is quite upon us. It kickstarts in the next couple of weeks or so, with Infosys coming out with its earnings, or on October 12th. So, what are your broader expectations from the Q2 earnings of India Inc., and any sectors that could perhaps outperform, and any sectors that could play a spoil sport?
I think the sectors which can outperform clearly would be your auto, where we are still seeing extremely good demand. Cement could be, one dark horse in this earnings season, because what we have seen in the past couple of quarters is that we have seen that the production and the sales have in fact gone up, but the realizations had not gone up. But in the last couple of months, we've been now seeing that the prices are going up, the cement prices are going up. So because of which, I think the margins would be higher this time for the cement sector. So that will be, I think, a surprise for most of us. Where I see, weakness continuing could be metals and even IT to a certain extent. I mean, I really don't see a major revival for IT in this quarter. Possibly we could see some sort of revival in December or maybe in March next year. So I think we have another possibly a quarter or more to buy into IT, but this may not be the right time to start buying.
Now, before we talk about IT stocks, I also want to quickly touch upon the auto bag. You are bullish on the auto segment. Now, two-wheeler stocks, Mr. Baliga, which were reeling under the pressure of inflation and lack of demand, especially from the rural parts of India, has seemed to be like they are turning around a corner. And in fact, a lot of these stocks have given good returns, double-digit returns in the last couple of weeks or so. Now, a lot of brokerages are saying that the entire two-wheeler segment is moving towards premiumization. Therefore, perhaps stocks like Eicher Motors could be one of the picks. What are your picks, sir? What are you picking in the two-wheeler segment?
In fact, I don't have too many picks in the two-wheeler segment. In fact, my pick out there would be TVS, but I'm more bullish on the passenger vehicles and the LCVs segment. So my picks clearly would be Tata Motors, Ashok Leyland, Maruti, and Mahindra & Mahindra.
Now, let's also quickly talk about the IT pack. Now, IT pack saw some buying interest after Morgan Stanley raised target price on, a lot of these bellwether stocks from Infosys, HCL to TCS. Now, Morgan Stanley has said that it expects FY25 revenue growth to improve in light of the, the recent acquisitions in order. We have seen Infosys landing, orders worth $5 billion or so in a matter of couple of months. So, perhaps the expectation is that IT sector could see some sort of a reversal and perhaps emerge as a contrarian bet. What's your opinion, sir?
No, like I said, possibly we could see the revival starting from December or maybe March of March 2024. So, whatever report has come out that FY25 could be better, yes, I think FY25 should be better than FY24. And FY23 for most of the IT companies. But then when you see that the earnings are more or less flat or slightly negative, quarter on quarter for the next 2 quarters or next 1 quarter, I think it will have an effect on the stock prices. I mean, people may not look at FY25, but then what's happened immediately. So that could be a buying opportunity. That's why I'm saying that possibly the next 1 or 2 quarters, you could see most of the IT stocks correcting because of the earnings. And that should be utilized to buy, because if you're talking of FY25 and FY26, I think the scenario looks much better.
Now, Mr. Baliga, NSE's semi-annual index rejig is set to take place tomorrow, and it will come into effect from Friday, September 29th. Now, what stocks could see some inflows as a result of this rejig, and what stocks could perhaps see some outflows?
I've in fact not looked at it very closely, so it's a bit difficult for me to really comment on that.
All right. Fair enough. Then let's move on to other topics. Talking about the NSE, one thing that the entire trading community is looking forward to or looking at trepidation with is the fact that there's going to be an extension in trading hours, 6 p.m. to 9 p.m. a possibility. We're sort of going towards it. I'd love your thoughts on it, Mr. Baliga. Are you somebody who's happy with the fact that this is happening, or are you also having some reservations over it?
No, I mean, frankly, for me, it does not make much of a difference, because I don't play on the F&O side of the market. I'm more of a long-term investor.
Fair enough, but still, your thoughts on the fact that we're going to have this now, this extended trading hours?
Because a lot of, the market is divided on the fact that some of the participants are saying that, it will perhaps help market absorb the impact of global shocks sooner rather than, the next morning. Whereas the other sect of the market is saying that, it will just add to the stress of the traders, and for the same pot of money, you'll be working more.
Extra work.
No, that's true because see, if you have the markets working longer hours, clearly it will take into account the shocks or any sort of news flows globally, so that the market does not open with too much of a gap up or down the next day. But then I think if you look at the other side as to, how, the employees or the traders will actually manage this. Clearly, this 3 hours is out of the family time which they would have. And I don't know, even if it's compensated, but then I don't think you can really value the family time, the 3 hours of family time which we'll lose. And I'm not too sure whether you'll have two sets of people working on this. Those who are there from morning 8 to 3:30 would be one set, and possibly evening could be another set. But then 3 hours and just F&O, I don't know whether you require one more set of people. So still, I would say it's a bit fluid as to how it'll work out from an employee's perspective. But as of now, they'll have to put in more time.
Okay, put in more time. I want to move on to one more thing as well, apart from the extended trading hours. Another thing that's a possibility that's going to happen when Indian stock markets has not happened before, happens in the US, is fractional trading or fractional investing, fractional shares. Now both the Ministry of Corporate Affairs and India's market regulator SEBI are together in unison, quite sanguine about the fact that we will be introducing a fractional investing. Talk to us in a country where there are stocks like MRF and Page Industries. Would you say that it's time we got fractional investing? Just like they have it for these huge shares in the US like Apple and Facebook and the FANG stocks, so to speak.
Absolutely. I think, this is long overdue. And clearly, this will increase the participation of people in the Indian markets. Because with sort of a fractional holding, you can possibly even invest in the equity markets with possibly 100 rupees or 50 rupees. I think that should be very much be possible. Because if you look as to what had happened for the cryptocurrencies, and people could invest even 100 rupees in cryptocurrencies, and because of which the sort of number of investors which were there, I think about close to about 10 crore accounts were there as far as cryptocurrencies was there. And if you compare that with the equity markets, we got 10 crore or 12 crore accounts over the last so many years, and cryptocurrencies got that within about a year and a half, 2 years. So clearly, I think the entry level was a barrier. And with this tokenization, I think that entry barrier will be removed, and you'll have many more people investing in the Indian markets.
As Mr. Baliga said, fractional trading will definitely improve the overall breadth of the market. Volatility will come down. The barriers to entry in some of these high price stocks will come down. Investors can perhaps invest 100, 200 rupees in some of these stocks which are trading at 40,000, 50,000. In MRF's case, 1,09,000 rupees. But sir, I just want to bring back the discussion on the longer trading hours. I just want to get your opinion on what will be the impact on traditional brokers. Now, will the incremental revenue that they will generate from additional trading hours offset their incremental cost?
I doubt it. At least to start off with, I doubt whether the incremental trading will offset the costs, because whatever said and done, you'll have to have your office open for that 3 more hours. You'll have to have people sitting there, and surely you'll need to compensate them to a certain extent. And I don't know whether, like after trading for nearly 5.5, 6 hours, during the day, whether there'll be so much of participation, like in the evening from 6 to 9. Yes, clearly the turnover will go up, but may not be commensurate with the costs involved, at least initially.
Sir, can we also expect longer trading hours in the cash segment anytime soon?
I just hope that does not happen. But then, yes, this possibly is the beginning of longer trading hours, because if you go back, say 25, 30 years, we just used to have the markets open for 2 hours a day, and from there we have in fact gone to closer to about 6.5 hours. So that's I think this could be the beginning of that. So we could have a longer trading hour for cash, but I just hope it doesn't happen.
Right, you're clearly not looking forward to these extended. You clearly belong to the camp that's convinced that there is nothing good that can come off extended trading hours. Trade better within the given trading hours would be your mantra?
Absolutely, because see, I mean, finally in life, you need to have some balance. I mean, if you're working for 6.5 hours, you need to have some family time, and I think this is what will be snatched away.
Right, and 6 hours of high pressure working. We're talking about the stock markets, no less. Just like live news that's there online, like us. High pressure work, 6.5 hours. You're going to need your downtime. Is the word coming in from Mr. Ambareesh Baliga. Mr. Baliga, as always, a pleasure and a joy and a privilege talking to you. Thank you so much for taking time out to be with us this afternoon here on Business Plus. And with that, Suyash, we have wrapped up quite a lot of things, isn't it? It's might not have been the greatest of openings for markets, but a good close and lots to discuss in terms of both fractional investing and longer trading hours. But clearly, forget longer trading hours. Fractional investing certainly is a positive that everybody agrees with, isn't it?
Yes, it looks like fractional trading something that could be implemented sooner rather than later. I mean, there is chatter about, the longer trading hours, but fractional trading, at least we have seen a consensus there that, it will be positive for the market. It will improve the overall breadth of the market, reduce barriers to entry, make investing a lot more easier for retail investors. So overall, it looks like a big positive and a move in the right direction.
Move in the right direction as far as fractional trading is concerned. So Yash Maheshwari there, putting a lot of things into perspective, not just the day's trading session, but all that's happening in India stock market. So Yash, great having you in the studio as always. And time now to shift focus away from stock markets. We've discussed just about everything surrounding it. Let's move it away to something that we found, news that came in just a short while before we began this broadcast. A very interesting piece of news. It affects you, me, and just about everybody that is born in India for sure. That's because now the birth and death records of every single Indian is said to be digital and will be put in a central government portal. A centralized database is set to be created. So that's what we understand. This news coming in basically means that from the 1st of October, your digital birth certificate is set to be the one document that you will be using for just about every purpose possible. Bear in mind, the Ministry of Home Affairs has stated that the provisions of the Registration of Births and Deaths Amendment Act 2023 is set to come into force from the 1st of October. It will pave the way essentially for the all-important digital birth certificates. And digital birth certificates from the 1st of October will be the single document used for multiple purposes. Let me list out the purposes that we're talking about as far as digital birth certificates are concerned. Admissions to educational institutions, applications for driving licenses, government jobs and passports, and of course, applications for Aadhaar, voter enrollment and marriage registration. Now, these digital birth and death records will see the Registrar General of India establishing a national and state level database of birth and death registrations, and chief registrars and registrars in states will be obligated to share data and registered births and deaths with the national database. It's compulsory for states to register births and dates on the central government's Civil Registration System or CRS portal and share that data with the Registrar General of India. Now, the centralized database will update the National Population Register or NPR, apart from updating ration cards, property registrations and electoral rolls as well. Now, bear in mind that the NPR or the National Population Register has a database currently of 1.19 million residents, and NPR is indeed the first step to creating the National Register of Citizens or NRC as per the Citizenship Act. So, going forward from the 1st of October, expect digital birth certificates to come your way. But in the meanwhile, moving on to another important story that we are tracking, and that is from the startup space, because LinkedIn has now come up with a list of the top startups of the year 2023. Let's quickly take a look at the top Indian startups, so to speak. And number one on LinkedIn's list is none other than the quick commerce delivery platform Zepto, with a headcount of around 1,400, headquartered in Mumbai and founded in the year 2021. And Zepto is the number one as far as top startups in India is concerned. Quick commerce delivery companies exploding in the recent past, but bear in mind this list has also witnessed the boom of space tech startups, artificial intelligence startups as well. But as far as LinkedIn's top 5 startups for the year 2023 is concerned, Zepto is number one. Number 2 is Blue Smart, the electric cab hailing service. Blue Smart, with a headcount of 620, founded, headquartered in Gurugram. A fantastic service that takes you from airports to your home and from home to your airports, all electric, all green. That startup finds its spot at number 2 in the LinkedIn list. And post that, after Blue Smart, we have Ditto Insurance, which has a headcount of just around 250 people from another Bengaluru startup founded in 2018. It's what is called as a brand new InsurTech startup or insurance technology startup, basically helping people compare insurance plans and policies and understand them and helping them buy the right insurance and the right amount of insurance that they need in their lives. Up next on LinkedIn's list is Pocket FM, with a headcount of nearly 500 people. It's an audio series platform that offers audio entertainment and of all genres and languages, Indian languages, and it has 100,000 plus hours of a content library at its disposal. Another Bengaluru startup, Pocket FM, finding its spot in the top startups of LinkedIn. And then, of course, I've been talking about space tech, Skyroot Aerospace, with a headcount of 260, headquartered in Hyderabad. Skyroot Aerospace, space tech startups doing really well in the recent past. Hyderabad-based Skyroot Aerospace, specializing in futuristic space launch vehicle design and building. And that's pretty much the top 5 as far as LinkedIn's top startups list is concerned. The list is longer, but we've just brought you the top 5 clear trends emerging over there. And good news coming in the way of Zepto as well, which is the number 1 startup on this list, which has now raised $200 million in Series E funding and has valued the company at $1.4 billion, making it the first unicorn of the year 2023. And the fundraising round, bear in mind, was led by US-based private market investment firm Stepstone Group. Zepto set up in the aftermath of the pandemic, and the investment also marks Stepstone Group's first direct investment in an Indian company. So that's the story as far as India's startup space is concerned. Right, and then we are moving on to the next story that we are tracking quickly, telling you about the startups as we speak. We stick with startups, but we move on to a set of startups which are under grave threat thanks to the imposition of 28% GST on their business. And we're talking about the gaming startups. And they are in the news repeatedly in the recent past because of tens of thousands of crore rupees worth of tax notices that they've been sent by the Central Board for Direct Taxes. And these companies are now taking them to court and they're not willing to pay these. We had Dream 11 taking matters to court. Dream 11, which has tax notices worth 25,000 to 40,000 crore rupees. And then you have everybody else, the top gaming startups in the country, following suit. To understand what is going to happen going forward, we have some special guests joining us. We have Mr. Asish Philip Abraham, partner, Lakshmikumaran and Sridharan attorneys now joining us. Ashish, thank you so much for taking time out to be with us here on this edition of Business Plus this afternoon. Now, this has been in the news. The quote that's often reported is, quote unquote, game over for online gaming startups. That's how, because from 8% worth of tax to nearly 28% worth of tax. That's going to change their business model completely. It's going to destroy their business model is what they believe. And now all these tax notices coming their way, they're being taken to court. Do you think they will get any kind of relief from courts because of these retrospective tax notices?
Thanks, Radhani. The gaming space has been seeing a lot of changes in the last 6 months, be it in income tax, TDS, or new intermediary rules, and coming to GST. the GST, it has been in the news because of the shockers notice issued to Gamescraft and Karnataka High Court setting aside the demand. So what is interesting thing in the notices is that prior to amendment which is made in the July 2023, whether GST is liable to be paid, because the law was amended to tax it from in a different manner from 1st October 2023. A new regime is coming. Prior to that, whether online games of skill are covered by the definition. The earlier matter of Karnataka High Court is pending in the Supreme Court. So when the GST Council took a decision, the Council was aware of the fact and the Council said that let the Supreme Court decide the fate for the past period. So it will be interesting to see what fate Gamescraft matter will have in the Supreme Court in relation to the shockers notices issued. So as the law stands today, only games related to chance, which are betting and gambling, are taxable. Everything else was excluded. Now, definition was changed to include games of skill. So, retrospectively applying the shockers notices is difficult under the current legal position. So, we feel it's difficult unless the matter which is pending before the Supreme Court, a different interpretation is taken by the court, which is different from the view taken by the Karnataka High Court.
Right, and these writ petitions are going to come thick and fast going forward, but you have the Supreme Court that stayed Karnataka High Court ruling listed for the 10th of October. This is with respect to petitions in the Bombay High Court. This is the Dream 11 battle specifically, so to speak. You have multiple companies joining now. The question here is that it's always about whether retrospective taxation, how much validity has, in terms legally speaking, because you've had this happen with the telecom companies as well. But as a term, retrospective taxation just doesn't sound right.
So, as a principle, after the Vodafone judgment, the government as a tax policy decided they will never be going for a retrospective taxation. Always it will be prospective. However, the government is taking a position that whether the current interpretation of the law as stood always was is it a clarificatory amendment or retrospective? The government position seems to be the way they filed the appeal, etc. Seems to is the amendment is clarificatory, which according to us is not correct. When the definition itself, the law itself was changed, it's a new substantive change. Since being a substantive change, it cannot be said clarificatory and applied retrospectively. All the gaming companies where the shockers notice will be issued in similar lines to Gamescraft, no other option than to approach the various high courts where they are situated to bring a logical end to this dispute.
Right, bringing a logical end to the dispute, but it's always the question here is that another morality question: is it a game of chance or is it a game of skill? And in correspondingly, taxation being decided on the basis of that. Correct?
Correct. So to explain, give background. Today, actionable claims other than betting, gambling, and lottery is excluded from GST. After October 1st, new amendment. Games of skill, action claims in related to games of skill is also taxable. So prior to that, unless games are being proved that it's a games of chance, it's not taxable. So all the games which is played today in India are games of skill, which is permitted in terms of the Public Gambling Act. Games of skill are not prohibited.
Right. Stay with us. We also have Mr. Girish Vanvari, founder, Transaction Square, and former national leader tax KPMG joining us. Mr. Vanvari, talk to us. You have Dream 11 filing a writ petition at the Bombay High Court against tax notices worth 25 to 40,000 crore rupees. Hasn't sent its way. For now, only MPL is yet to be sent tax notices. All top gaming startups and companies in this country have been sent tens of thousands of crores worth of GST notices. Do you think that these companies can find recourse through law?
I think this is going to be very, very interesting. Is this retrospective or is this prospective? Is this clarificatory or is it something which is new in the act? The law will really pan out on this, like it happened in Vodafone's case, wherein we had the similar kind of issue. But yes, everybody will rush to the courts because it is existential crisis. The amounts are very huge. The amounts which we are seeing in various news flashes, is that the real amount or is it now reduced significantly because at least the amendment is 28% of the money put in and not 28% of the money which is continuously with the profit reinvested, rebet, so on and so forth. So really it is going to be a very interesting few days ahead for all the gaming companies who will rush to the courts to see what can be done, what stake can be got, how can this all be dealt with.
Right. Point being is that at this stage you have certain judgments coming in from Karnataka High Court, which gets stayed by the Supreme Court, and the Supreme Court has now put a hearing for the 10th of October. What do you expect from the Supreme Court on the matter?
I think that will be very critical. Do they endorse this, or will they change it? If the judgment of Karnataka High Court falters in the Supreme Court, then we have a serious issue with everyone. Serious issue. So all eyes will be on 10th. I think that's the date.
Right, that's right. The 10th of October. I want to know your expectations of what are the possibilities that are there in front of the Supreme Court for this entire thing to progress as far as the legal system is concerned for these cases.
I think if Vodafone has to be followed, then the outcome will be different because the prospective law will prevail. But if Vodafone gets challenged, contradicted, because Supreme Court will look at the Vodafone judgment as it decides this. So really the Supreme Court will be very critical, and it will be interesting to see what arguments are attached for the retrospective amendment in the Supreme Court arguments, because that is something going to be very critical in this whole outcome. So I'm going to be interestingly watching this, and I'm not the Supreme Court to say what will Supreme Court say, but as a professional will be eagerly watched as to how this thing moves forward.
Right. Of course, we will also be keeping a track and hope we get you back on the same day on the 10th of October to discuss the findings or the decisions that made by the Supreme Court. I also wanted to ask you, okay, that's as far as the validity of the tax notices is concerned. But what about the tax itself is concerned? You know, that debate between game of skill versus game of chance is where this whole thing hinges upon.
Yeah, but I think a game is a game, and that's what it will tend towards. So going forward, game of skill, game of chance, I think game will be a game. But can it be 28% on the total amount put in the platform is something which we will have to see from a past perspective. So I think, I have no problem with the law as it goes ahead, because that's the lawmaker, and they decide to treat a particular thing in a particular way. And everybody is clear as it gets into that business. But for the past, how will the law look at it? How will the courts look at it? Something which will be very interesting for all the gaming companies who are going to be dealing with this in the next few days.
Right, because Gamescraft right now, you had it, you got a good message coming in from the Karnataka High Court, good decision coming in from the Karnataka High for Gamescraft, whereas Dream 11 and other companies are still waiting for what is going to happen with them. But in the meanwhile, are you really saying that the outcome of the taxation on telecom companies will have a huge impact on the outcome of this particular case of taxation on online gaming companies?
I would not exaggerate and say a huge impact. I would say it will be a good reference point.
Okay.
As you look at the retrospective part of it, it will certainly be a good reference point.
Okay, and are you not, unless otherwise the Vodafone case is decided, you're not expecting a finality on these matters as well?
I am hoping so, because there are so many business models which will shake with this past litigation. Going forward, obviously, they will recalibrate to the new law. But for the past, how will they deal with such huge amounts? Some solution has to be found between the government and these companies.
All right. We will leave it at that. Mr. Girish Vanvari, founder Transaction Square and former National Leader Tax KPMG. Thank you so much for taking time out to be with us. And of course, Mr. Asish Philip Abraham, partner, Lakshmikumaran and Sridharan attorneys. Thank you as well for taking time out to be with us. And with that, we have completely wrapped up on this particular edition of Business Plus. But before we let you go, here's a very important programming note. The big show tonight at 10 p.m. on News 9 Live. Duologue, TV9's MD and CEO, Mr. Varun Das, in a candid conversation with the founder of the Isha Foundation and spiritual leader, Sadhguru. Take a look at this sneak peek and make sure you tune in tonight at 10 p.m. And with that, it's a wrap here from my side. This is Krishna Kumar signing off.
How do you define success? And is success important?
Success is the only thing that's there in life.
So between happiness and success, which would you prioritize?
Happiness is also success, isn't it?
And then success leads you to happiness.
No.
Then
Why do you need happiness when you're successful?
how do you feel once you're successful? There's a feeling.
Yeah,
Happiness is an expression of
I'm
your
already
feeling.
exuberant and blissed out.
An ordinary person like me.
You're a very special guy. You keep on saying, I'm ordinary, I'm ordinary.
No, as I said, ordinary is extraordinary. So maybe somewhere in my mind, I believe that I'm extraordinary.
Duologue with Barun Das featuring Sadhguru Jaggi Vasudev. World premiere on Connected TV. Tonight at 10, only on Newsline Live. India's first and only digital exclusive English news stream for Connected TV. Supported by Alliance Broadband.
इंजीनियरिंग कर रहे हैं क्योंकि सभी लोग कर रहे हैं.
Coaching is now starting from grade 3, 4, 5, 6.
कोटा जाने वाली बीच राह में आधे टेस्ट देके हैं सिलेक्शन की चाह में.
ऑल इंडिया का बच्चा कोटा जाता है.
This rat race is for rats, not for humans. So why should we even be a part of it?
The Rat Race. This and more streaming on world's first news OTT, News 9 Plus. Download now.
He thought he could outlast us. And 1 year later, the evidence is right here in this room.
Who will blink first?
So far from preventing the expansion of NATO, Russian actions have actually resulted in the expansion of NATO.
It's a mess for Russia and it's a mess for the Western world, for NATO and the United States.
Putin is a dictator, and if he loses, that means the end of his regime, and probably of him personally. So he has to keep going.
Year 2, no end in sight. Streaming now.
साथियों, आज के अखबारों में सेंट्रल बैंक डिजिटल करेंसी की भी काफी चर्चा है. इससे डिजिटल इकोनॉमी को बहुत बल मिलेगा.
Introduction of a central bank digital currency will give a big boost to digital economy.
डिजिटल पेमेंट, ऑनलाइन पेमेंट, रिटेल पेमेंट ज्यादा सुरक्षित होगा, रिस्क फ्री होगा. इससे कैश को प्रिंट करने, हैंडल करने, डिस्ट्रीब्यूट करने में जो बोझ पड़ता है वो भी कम होगा.
E-rupee is digital rupee. Quite simply put, it's India's own digital currency. Just like you have your currency notes which you can hold in your hands physically, this one you can hold the e-rupee in a digital form, in a virtual form, in a wallet online. The e-rupee is essentially India's CBDC or Central Bank Digital Currency. The Reserve Bank of India, India's central bank, launched the e-rupee officially on the 1st of December 2022. And since then, the e-rupee is being tried out in a pilot by a few traders and a few individuals in the country. And as of now, there are about 16.5 crore rupees worth of e-rupees available, which is less than 0.0001% of all the currency notes of rupees that's available in the country.
You don't print, and creating a digital currency is no cost. Absolutely no cost. It is like you and I creating a painting on a computer. Right, so it's no cost. It goes into your routine IT computer links that you maintain or Wi-Fi you maintain, so it will go like that. It saves a lot of hassles to RBI. It saves the fake currency issue also, because if there is no print, there is no fake currency. It's all digital.
Around 130 countries across the world, which account for 98% of the world's GDP, are all developing their own CBDC or central bank digital currency. 19 of the G20 countries are in advanced stages of launching their CBDC. Including India, 11 countries across the world have already launched their own digital currency pilots. And all of them have happened at the same time as we've seen the rise